Welcome, welcome, welcome. Come on in to the virtual room. Welcome, welcome, welcome all. Welcome into the virtual room. Okay, taking care of some housekeeping things here. Welcome, welcome. Greetings, everyone. I am Keisha Brody, your coach for this evening, and we are working on our credit. Okay, we're talking about credit repair, and I have a 5-day challenge for you to repair and maintain excellent credit. So I hope you are ready to get started. Take out your notepads. There will be plenty of things that you can take note on, and there is an expectation for you to take action. So let's get started this evening with day one of our challenge to repair our credit. Let me share my screen. And we're going to begin with day one. Okay. Day one, we're dealing with payment history. So I thank you for coming to this workshop for the Smart Credit System workshop. And I am so excited to be able to share some great information with you today. And so after you complete this workshop, you will have the information you need to make the right decision regarding your personal credit needs. Okay, so I'm very excited. Again, let me give you a moment to grab your tools, whether it's a tablet, electronical, digital, or traditional pen and paper. Get those tools out. You're going to want to take notes. Now, when we talk about payment history, we're talking about how well you have paid your bills. Okay. And this is the most commonly known factor for your credit score. And it has a huge impact on your score. So you want to make sure that you understand how payment history works. It is measured in increments of 30, 60, 90, 120, and 180 days. Note that you could be 25 days late and it's not reported on your credit file. Okay, and so you will be charged a late fee, but it won't necessarily be reported. So the solution for payment history is centered around 4 letters that are often called the 609 letters. Now, these letters address a consumer's right under Section 609 of the Fair Credit Reporting Act that states credit reporting agencies are required to only report verifiable information and provide the consumer with proof of verification if requested. Okay, and so these letters would include the debt validation letter, and that's where the FCRA states that you have a right to request that the credit reporting agency validates the debt that you are disputing is yours. 2, method of verification. And this is the letter where the FCRA states that if the credit reporting agency validates your debt letter, you have the right to ask them for proof of verification. Then there's the violation of FCRA rights. And this letter reminds the credit reporting agency that they have not provided proof of verification that was used to validate your debt, and that therefore, according to the law, they must remove the debt off of your credit report. Okay. And then there's the 4th letter, which is the intent to litigate. Now, this letter is the last letter sent, and it notifies the credit reporting agency that you have exhausted your means of disputing the debt and that they have not proven their method of verification. And so you are notifying them that your next course of action is to sue for violation of your right. Okay. This is not to say that you do not owe the debt. This is to say that they violated your rights in pursuing to get money for that debt and by reporting it to the credit agency. Now, this process can be completed in usually 30 to 120 days. And so there are also additional letters that we have that includes goodwill letter, pay for deletion, medical dispute, tax lien disputes, etc. And so those letters may be required depending on your circumstance. So just remember that 79% of the people who disputed errors, they were successful in removing them. Okay. So this process is where the credit repair companies will stay in, and they will go round and round in circles in this process here. And this is what they're charging you every month for sending off of these letters. And so we're going to show you how to be able to do that on your own. Now, when we speak about credit score, a lot of people misinterpret what good credit is. Okay, they're in the 600s and they're saying, "Oh, I have good credit," when technically you need to be in the 700s in order to be considered good credit. Okay, so when we're talking about good credit, bad credit, we're talking about the credit score from FICO. Okay, this is your FICO score. Okay, and these scores are used by many lenders that range from 300 to 850 points. Okay, scores that are 750 and above, they're considered to be very good or exceptional credit. And applicants with 800 score or greater, they tend to receive the best interest rates. Now, applicants with a credit score ranging between 700 to 749, those are solid customers who lenders love to lend to. Okay, borrowers can typically get a fair interest rate. Now, applicants with a credit score between 650 and 700, they usually have no problems qualifying for a loan, but the rates they pay are not favorable. Okay, very high interest rate. And then the applicants with credit scores between 600 and 649, they are considered to be subprime borrowers, and they pay the highest interest rate next to those with bad credit if they can even get a loan. So applicants with a credit score below 600, they may be required to pay a fee or put down a deposit for things, or get someone to sign for them. So applicants with this low rating, they may not even be approved for credit at all. Okay, so you really want to understand that you have between 850 and 300 points. That's 550 points that are available for you to build your credit score. Now let's talk about payment history. When we talk about payment history, we address the whole score. Okay, the score again ranges from 300 to 850. And you have available points of 550 points to manipulate. Okay, so payment history is 35% of your entire credit score. Now, payment history is 192.5 maximum points. And so this is the largest factor of your score. Now, if you have perfect payment history, you still will only have a 492.5 score. Now, repairing your credit is easy because there is a basic formula that scores are calculated by. All right. Each credit reporting agency has subtle differences, but they're all based on 5 factors. So that's your payment history, which counts for 35% of your score, credit utilization, which accounts for 30% of your score, credit history or length of history, that accounts for 15% of your score, new credit, which accounts for 10% of the score, and then credit mix, which accounts for 10% of the score. Now, many credit repair companies focus solely on payment history. Now, the smart credit system that I'm showing you that we use has an advantage in that it addresses the whole score, which includes all 5 factors. And so over the next few slides, I'll share with you how the smart credit system addresses all 5 factors. Okay, so let's start the conversation with a few facts about the credit industry. When we talk about account types, we're talking about what shows up on your credit report. Those will be your credit cards, your rental accounts, your installment loans, your mortgage, bankruptcies, lawsuits, and tax liens. All of these show up on your a credit report. Now, do note that because credit affects everyone in some form or fashion, everyone is interested in credit. Okay, 68 million people have poor credit. Okay, 1 in 5 have an error on their credit report that's in need of disputing. In 2018, the credit repair industry earned over $3 billion. And 79% of people who disputed their errors on their credit report, they were successful in removing them. And so, because of the importance credit plays in our lives, everyone wants good or great credit. And so, that's what this session is about, showing you how to achieve good or great credit. Now, let's talk about late payments, okay, and reporting the details about the negatives, okay? Now, these reports are going to show how late you were, how much you owed, how recently it occurred, and how many of these that you have. Okay, all of these can be disputed if they are incorrect. Okay, now the credit report also shows your on time payment history. So do note that as people get older, their credit scores will typically improve. Okay. A study was done by Wallet Hub, and it showed that on average, the oldest people have the highest credit score. Okay, so 70 years old and above, they have an average credit score of 730. 50 to 69-year-olds have an average score of 700. 35 to 49, they have an average score of 655. And 21 through 34, they have an average score of 634. And 20 younger, they have an average score of 631. Okay, so as a person ages, they'll have time to accumulate wealth. Okay, and their income earning potential that grows, and their probably likely to be wiser and more financially responsible. And so, in addition, the credit formula weighs 15% of a person's score on length of history. So, older individuals will have had a chance to have a longer credit history than those who are younger. Okay, but we're going to show younger people how to still be able to improve in that area despite the fact that you are young. We'll show you how to get around that roadblock. Now, when you can't pay your bills, this is what you need to do. Here's a few tips to help you. Okay. Do not juggle trying to pay bills. Okay. You need to decide, don't try to decide who is not getting paid. Okay. You need and pay everyone else. Okay, and don't be pressured by bill collectors. Okay, so it's easier to later fix 1 or 2 accounts than 10. So you don't want to be juggling on them. You need to decide again who is not going to get paid, pay everyone else, and don't be pressured by the collectors. So just like statistically credit is impacted by age, it's also impacted by your income. So again, Wallet Hubs did a study and they showed that a higher person's annual income, then the higher their credit score was likely to be. So people with an annual income of 30,000 or less, they tend to have an average credit score of 590. People with a income between 30,000 and 50,000, they tend to have an average score of 643. Those with an annual income between 50,000 and 75,000, they tend to have an average credit score of 737. So you don't have to earn a lot of money to have excellent credit. However, your credit is based on your ability to pay your bills on time. So if you are in the lower income earning bracket, it may be tougher to always pay your bills on time due to your lack of financial resources. Okay. But understand that bad credit is not a cause of lack of income. It is the result of a lack of income. Okay. And so we're going to talk about how to address that issue as well. Now, the Fair Credit Reporting Act, um, the law is intended to protect consumers against the misuse and misreporting of your credit information. Okay. So we need to exercise our rights underneath the Fair Credit Reporting Act. So erroneous, outdated information, it must be removed. Okay, and many items are removed due to poor record keeping. Okay, so that's to our advantage. So the solution for payment history is centered around those four letters again that we talked about called the 609 letters. Okay, and these letters again they address your rights as a consumer under the section 609 of the Fair Credit Reporting Act. Okay, which states clearly that credit reporting agencies are required to only report verifiable information and provide the consumer with proof of verification if requested. So again, we have four letters: the debt validation, the method of verification, the violation of rights, and the intent to litigate. Okay, and this process again could take between 30 to 120 days to complete. Okay. And so that's what's included in our kit to help you to ensure that you exercise your rights under the FCRA. Okay, so when we're talking about the four letters, again, that's the debt validation, the method of verification, the violation of your rights, and the intent to litigate letter. Okay, so there are a few other letters that I mentioned earlier that can be used depending upon your situation. Okay, so you do not file a lawsuit if you know the debt legally belongs to you. Okay, get that straight. We're not trying to show you how to beat a debt that you paid. We're just trying to show you how to protect your rights. So now we have talked about a lot of information here. And so your day one action steps will include opening up a Credit Karma account if you have not done so already. This is free. Okay, so we'll talk about a lot of free resources before we mention anything that you may have to pay for. Okay, so understand that this is not the same as your FICO score, but it is a Vantage score. It gives you a glimpse at your credit score. It doesn't give you the score that the lenders are actually looking at, which is your FICO score, but this is a good place to start. Okay, you want to look at the score and you want to look at your payment history. Okay, that's why we're going to use this because this information on here is what will be on your credit report. And so we want you to look at your payment history. Okay, you're not going to do anything with the information here. You're just going to make a note of what is on your report. Okay, so I want you to take a look at this information. Okay, this is an area that most credit repair companies ignore. Okay. Credit utilization will be up next. That's what's 30% of your credit score. And that's what we're going to jump into on the next time. Um, this means that credit utilization is almost as important as your payment history. Okay. All right. So right now we want to look at your payment history, see what your payment history has been like. And then, and our next go round, we're going to talk about your credit utilization because that is almost as important as your history, counting towards 30% of your score. Okay. Now, your utilization, that is the ratio of your outstanding credit card balance to your credit card limit. Okay, and it measures the amount of credit limit you are using. So, for example, if your balance is 300 and your credit limit is $1,000, then your credit utilization for that card is 30%. And so, Smart Credit System, it helps you to utilize a concept that's called income shifting to address all of your credit utilization. That's the only way to fix credit utilization is to pay down your debts and increase your credit limits. And so if you've had bad credit, increasing credit limits will not be an option. Okay. Most people are living paycheck to paycheck and they don't have any breathing room to rapidly attack their debt. So in fact, they are behind on debts and they can't find a way to catch up. So the smart my credit system, it starts off with the first strategy of correcting your tax withholdings. Now, according to the IRS, 80% of taxpayers have their tax withholdings form filled out incorrectly. And with the average refund being $3,100, this strategy could add an extra $255 per month back into a person's household. And this money can then be used to catch up on debt and start rapidly eliminating those debts, thereby lowering your credit utilization. And so the next strategy inside the income shifting concept is creating business income. And the reason most people have bad credit is because they have limited income, which means they are short each month being able to pay all of their bills on time. The smart credit system is an affiliate opportunity for a person to not only fix their credit, but also help others do the same. So, as an affiliate, when you help someone else with their credit using the credit system, you will get paid. Now, this is additional income that can be used to pay down your debt, therefore, speeding up your debt elimination process and improving your credit score. The third strategy with income shifting concept is lowering your taxes. And as a smart credit affiliate, you are now a business owner and you qualify for business tax deduction. So you are given access to training that will instruct you how to write off numerous business expenses such as your car and truck expenses, cell phone and internet, travel to include rental car, airfare, hotel, a lot of things that you are paying for anyway, but they are not tax write offs for you. So, with our system, we'll show you how to legally convert these expenses into deductions, okay? Lowering your taxes and which will add more money to your bottom line. Finally, the My Smart Credit System gives you access to a debt elimination tool. Now, this software will instruct you on the order of debt to pay off and will give you the date when you'll be totally debt free, your debt free freedom date. This is all in a bundle in a company called My Econ that offers the smart credit system. My Econ provides you with all of the tools and resources to earn great affiliate income for selling a high demand product like the smart credit system. So as you are taking these action steps, opening up your free Credit Karma account for day one action step, also consider referring a friend to the My Credit system that you have access to, which can help you to pay off your debt to help with credit utilization, which is again worth 30% of your credit score. Okay, now don't just be a note taker, be an action taker. Make sure you make these first steps and come back again tomorrow, day 2, for your next step on this credit repair challenge journey. Thank you. I'm Keisha Brody, your coach for the evening. All right, let's get this credit together and get excellent credit. We're repairing and maintaining excellent credit so that we can have access to the money that we want, the places that we want to travel, the homes we want to live in, and the vehicles that we would like to ride. So let's work on this credit together. That's all. Take care, walk in victory, and let's make it happen. Have a good night.